All right, what is up, my peeps? Joshua Smith here with another GSD interview. Every single week, we interview top entrepreneurs, top real estate agents, and just people that are out there dominating their space. These are people that are choosing to not play life small, but going out there playing big and choosing to create an amazing, epic life for themselves and for their family. So today, you guys, I'm really excited to have our guest on the show today. This is a guy that's entrepreneur, business owner, coach, consultant, massive real estate investor. So our guest today, Keith Weinhold. Welcome to the show, my friend.
Thanks for having me on, Joshua. I appreciate being here.
Yeah, no, this is an honor, man. I really appreciate that you take time out of your busy day to be here. And, you know, a lot of our guests a lot of our listeners are tied to the real estate industry. It's where I got my start, kind of what I'm known for as well. And you know, we get a lot of requests for people wanting to learn more about getting into the real estate investment game. And, you know, I came across you, and I know you're a guy that's been very, very successful at it personally, but also teaching others. But before we get into that and really what you're doing there today, I'm really interested in your own personal journey, man. Like, let's rewind the clocks. How did this whole entrepreneurship journey start in the first place for you?
Well, it sure didn't come from my mother and father. I had great parents. I had a great stable upbringing, but I did not come from an entrepreneurial family or a real estate family. But I did come from a family that kind of encouraged me to think in expansionary ways. We went on a lot of vacations and such, even though we were no greater than middle class. One of those places I vacationed to, as I was born and raised in Pennsylvania, I vacationed in Alaska 4 times. With each successive trip, it got more and more into me that Alaska's the place for me. That's where I want to live. So in 1999, when I was very young, I moved to Anchorage, Alaska, where I live now. A city of 300,000 people, where I have all these amenities and choices of a city. I'm close to an international airport, and yet I have great access to wilderness nearby. So shortly after I moved to Anchorage, you know, I was kind of coming of age, and it was time for me to buy my first home. Well, in 2001, I had read the book Rich Dad, Poor Dad, and I think the number one thing that taught me is if you want to have something more in life, if you want to have something different in life, if you want to have something differently, you need to think differently. So in 2002, when it was time for me to buy my first home, I did not buy a single-family home. I bought a 4-plex building where I lived in one unit and rented out the other 3. So one day I was a rent-paying tenant, and the very next day I was a landlord and owner of a 4-plex, and I was on the other side collecting the rent checks.
Yep, that's awesome, man. So when you, at what point or when before you started this, were you in the corporate space? I mean, did you go out there and kind of do the corporate world job journey before you made that transition?
Yeah, I just stayed in construction materials testing. So it wasn't like a highly corporate job. You know, I would go out into construction sites in the field and do inspections out there and such. So it wasn't highly corporate. Part of my time was in the office. A lot of my time was in the field. Some of my time was in materials testing laboratories. So this is really a way for me to get ahead by buying a 4-plex building and having other people's money work for me. You know, this is the Get Stuff Done show. You want to get more done. You know, a lot of people think to get more done, I want to have my money work for me to buy me time. But you know what? Getting your money to work for you is slow. That is lame to only get your money work for you. You might create security for yourself, but you're not going to create wealth. With buying a 4-plex building, you've advanced that. You don't just get your money to work for you, you get other people's money to work for you several ways at the same time. That creates wealth, getting other people's money to work for you. So what do I mean by example? How exactly do you get other people's money to work for you? When you buy something like a 4-plex building, you get the tenant's money to work for you with monthly rent income. You get the bank's money to work for you through a loan for the property with leverage, and you get the government's money to work for you, and you get the economies of scale with those tax deductions on an entire 4-unit building. So you get other people's money working for you 3 ways at the same time. And in fact, this is something very specific and actionable for your audience, Joshua. With that loan program, where I started off with a 4-plex building, you can still get that same loan program today. All you need to do is have a minimum FICO credit score of 580, put a 3.5% down payment on a property, just a 3.5% down payment, and you only need to live in one of the 4 units for a minimum of 12 months. You can still do that today.
Yeah, no, I love that. So okay, so you go out there and buy your first 4-plex, but you know, I'm sure that's obviously not enough to fully stop the other job where you got to have some income still coming in. I mean, what was that journey like being able to step out from having a job to becoming a full-time entrepreneur through your real estate investing?
That came from continually leveraging that money, continuing to move that equity forward from one fourplex. As soon as equity grew from that fourplex, don't use any of my own money to go buy the next property. Again, it's not about using my money or getting my money to work for me. It's about using other people's money as best I can. So we had enough equity that appreciated in the original fourplex that I could take cash out of that with something called a cash out refinance to buy a second fourplex. Then equity grew in both of those fourplexes such that I 1031 exchanged those into more and larger buildings. 1031 exchange is sort of a technical sounding term. That just means that you don't pay any capital gains tax if you meet certain requirements. So it's growing what you have, and you really don't need to add any more of your own money. Get other people's money to work for you. Don't use yours.
Yeah, no, I love it, man. So, a lot of people will ask me, where should I start with investing? Should I start in the single family detached? Should I start in the multi-units? And it seems like a lot of people have a different opinion on that. Well, what you started with multi-units. What's your take on that?
Well, that's a great question, because a lot of people do think about the property first. They think, okay, if I want to get into real estate investing, what property should I start with? A single family home, a duplex? Should I go big and try to afford a 10-plex or a 20-plex? Well, I would tell that person, whoa, 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 slow down, slow down, slow down. In real estate investing, the property is only the fourth most important thing, although that's what most people think about and where most people start. The most important thing is you, the investor. What do you want? Are you looking for a property for lifestyle use or for passive cash flow, which is mostly what we're talking about here, or for appreciation or for tax advantages? What fits you? Secondly, you need to find a property that's in a viable geographic market, a geographic market where job growth is projected. Because you don't just want to buy a fourplex or some other building that's full of tenants on day one. You want to buy something that's full of tenants where you have a reasonable expectation that when those tenants leave, the next tenant that comes in is going to have a job, because that supports your income stream. So the second most important thing is the market. The third most important thing is your team. We're talking about getting more done here. You want to be in a market where you have a good, reliable property manager. You want to outsource that sooner than later. And then fourthly, then and only then, do you want to be concerned with the property. Now, some markets just don't have the dynamics such that a single family home is going to provide cash flow for you. It's typically in the Midwestern United States and the Southern United States, the Southeast specifically, where a single family home is going to be able to provide cash flow for you. So it really starts with you. It comes down to you.
So what were, before we get into talking about with your clients and how you advise your clients and how our listeners can be successful with it, what were some of those mistakes, that you made? We talk a lot, and a lot of people hear about successes, but everybody's they're building their businesses have to overcome some obstacles. So what were some of those initial mistakes that you made that became your greatest really learning moments through your investing?
Oh, great, Josh. Because from one perspective, as you go on, your mistakes, in a way, they don't get smaller as you learn more. In fact, in a sense, they get bigger because you're bigger, so the consequences of your mistakes are bigger, okay? So starting off early on with a lower level mistake, when I was managing that fourplex myself, because I lived in one of those units, rented out the other three, so it's relatively easy to manage. I'm not having to make a trip over to a property that I don't live in. But one of my problems, one of my early mistakes was renting to girls merely because they were attractive. That was their number one qualification for renting a unit, because they were going to live in the fourplex unit right next to me. To have these three beautiful girls right next to me, yeah, they were qualified. I was in a hurry. It was a busy summer. I didn't have time to check their credit scores and all that. They communicated well, and they were the worst tenants I ever had. They tried to hide a dog on me, and you weren't allowed to have pets. How dumb is that, to try to hide a dog on the landlord when he lives right next door in the same building? They threw parties so hard that the police had to show up twice, and I was not getting invited to the parties. So you got to remember that the income stream comes from the tenant, and they were not a sustainable tenant. But, as time went on, Josh, and I began to get more properties, it began to get to be a lot to manage. I self-managed 8 units. That's as many as I ever managed, which were the two fourplex buildings. And, it was really beginning to put a strain on my life because they call it property management, but it ought to be called tenant management. And tenant management will make you lose faith in humanity dealing with some tenants. So, I was looking to get into hiring a professional property manager. But you know what a lot of old time property managers told me is, Keith, no one is going to take as good a care of your property as you. You ought to manage it yourself. And you know what? Those old time property managers were right. No one's going to take as good a care of it as me. But what I found out is it's not worth my time, my own personal time invested just to get that last 3% of perfection. Look, be responsible. I never want to get called a slumlord. I provide housing that's clean, safe, affordable, and functional. I do clean, safe, affordable, and functional. In the Class C space that I'm in, as soon as I try to do beautiful, I lose. So finding a communicative property manager that can do clean, safe, affordable, and functional, that's what leverages my return the best. As real estate investors, we have all these metrics, all these calculations, and all these calculations are really pretty simple. It's just addition, subtraction, multiplication, and division. It's just knowing what calculation to use. We've got cap rate, cash flow, internal rate of return, return on income, cash on cash return. We have all these metrics, but you know what? The one return that most people are not calculating it's just because it's something you're never going to see on a Microsoft Excel spreadsheet is what's your ROTI? What's your return on your time invested? That's how you can get more done. Outsource the management task. I suggest to most people that they self-manage for 1 to 2 years, then outsource your management because you're going to get a monthly statement from that property manager thereafter. You're going to be able to interpret that property manager statement a little bit better because you were on the inside and interpreting it, and you know when you're being ripped off and when a manager is being straight with you. So it's not imperative that you self-manage for a year or two, but it sure does help. So those were some of the problems: running to the wrong people and self-managing for too long.
Yeah, because it eats up that time, keeps you from looking at finding other deals, but then might even start to turn you off from investing because those tenants are such a headache.
Yeah, you're absolutely right. Or, I want to live a good quality of life. That's why we're doing all this stuff, Joshua, right? That's why we own businesses and we do things that are often correlated with success. But, we want to live a good life behind that. When I go to Kauai or my wife and I go to Central America on a vacation, I just don't want to have to be concerned with, some tenant getting a hold of me that a piece of their hardwood floor came up and needs to be glued down again. I don't want to hear about that. I want to live a bigger life than that.
Yep, absolutely. So when it comes to a property manager, I've got a good friend of mine that has 37. They're single family attached units, but he bought them at the low of the market, so they're cash flowing pretty well for him, and he still self manages every one of them. And he's freaked out about he wants a property manager, needs one, but how do you go out there and identify them? Are there any things to look for? Because if I managed them myself, I still need to go out there and find that right person. Do you have any tips or tricks to make sure, things to ask, things to look for to make sure that you're getting that right property manager?
Great question. If you can, sit down with them. I like the value of doing things in person. One great question to ask a property manager, after you've already told them that communication is key and you've really driven home the importance of communication. One thing that you can do when you're sitting face down with your property manager there is say, hey, do you mind pulling up your website and just showing me what vacant properties you currently have that you're advertising to prospective tenants for your investor clients? And, they're going to go ahead and pull that up for you. And, at that time, just go ahead and pick 2 or 3 of them and ask that property manager that you're interviewing to have someone take you to 2 or 3 units that they're advertising that are currently vacant. And you just taken a sample size of how they show a vacant unit. So go over to 2 or 3 of those vacant units and see how that manager's prepared them for the next tenant. Are they clean? Do they smell good? Does the door close? Do the windows close? Okay. So are they offering something of quality to a tenant? Because again, you want to be responsible, provide something that's clean, safe, affordable, and functional. But if they don't, and if a vacant unit that's being advertised and is being rent ready does not have the bushes trimmed outside and the walls are still yellow and there's still little holes in the walls, or the door doesn't close, well, what type of tenant is going to accept that condition at move-in? Okay, it's probably going to be a tenant that you do not want in your rental unit. So that's a great way, and a very fair way, because you know the property manager is going to tell you all the right things in the interview. That's a very fair way to see if they can back it up and if they're providing a responsible product.
Yeah, awesome. And I love the fourplex kind of plan of action, because you can pick up a lot of fourplexes in a lot of areas for the same price you can a single family attached property. And then if a tenant moves out, we got three others in there. So let's say somebody wants to start with a fourplex and maybe they're not able to move into it. Maybe they have a family and all of that, so they're having to buy this is a full-on investment. So they can't take advantage of that 3.5% down, FHA style of a loan on that complex. Where would they start there?
Okay, excellent question. Because a lot of people are in that scenario and they don't want to sacrifice the quality of life by living in a communal fourplex. Before we go on with that, let me just add that some fourplexes, they do have their own garages and they do have like 3 bedrooms and 2 bathrooms in every unit. So you might still live an okay quality of life, but yeah, it probably does limit you with, for example, a fourplex that's available in your market. Now, if you don't plan to move into the fourplex as an investor and you want to get Fannie Mae financing, which give you the best loan terms and the lowest interest rates, you need to put a 25% down payment on the property, which can be pretty steep in some markets. Some other things that you want to look for numbers wise, and this is just very general here, you want to look for rent incomes that are at least 1% of the purchase price. So for example, if you buy a $400,000 fourplex, you want the monthly rent income to be $4,000. That monthly rent of $4,000 being 1% or greater of the purchase price. So if each unit in the fourplex rented for $1,000 and the sale price is $400K, that's just a quick and dirty superficial metric. There's more questions that we have to ask, but that's one metric that you might be looking for a property that might very well make sense. But I would say, nothing's more important than, are there sustainable jobs in the area? So by the time you buy it, if you put a 25% down payment on the property, you're only making a 75% loan. When you project that out, you do want to have income that exceed the expenses every month, and you want to calculate that conservatively. So your income is typically only your rent income. You might have some laundry income as well. So, and every month you want to deduct out the mortgage principal, interest, taxes, insurance, maintenance, and the management expense. And you want that to be a positive number. And those are some good indications that you might have a good property, but yeah, it is going to take a larger down payment.
Yep, love it. So what are some of the, I know you coach and consult a lot of people through the courses that you do and through your guys' website and your podcast. What are some of the top maybe 2-3 mistakes that you see a lot of kind of novice investors that a lot of them have in common that they're out there that they're making that they should be looking to avoid?
Well, the number one thing is fear. At the beginner level, it's that fear of starting. And it goes back to, to have something different, you need to do something different. Most people have heard that real estate's created more wealthy people out of ordinary people than anything else. So to overcome that fear, learn, educate yourself. My business is called GetRichEducation.com because once you educate yourself, nothing dispels fear like education. All right. So once one starts, I think the next fear or problem one needs to overcome is the old DIY mindset, the do-it-yourself mindset that one really just needs to get out of. It's kind of becoming an old-fashioned mindset that one needs to do everything themselves. And that biggest one is getting over the hurdle of them thinking that they need to be in so much control that they need to self-manage their property, even as that might degrade their lifestyle over time. I'd like to say that, some people get so busy being a human doing that they forget to be a human being. Yeah. They think they need to do it all themselves. Some people get so busy being a human doing that they forget to be a human being, and they forget why we're doing this whole thing. It's to live a better lifestyle, and at the same time, it's to serve other people because we are providing them with some sound housing, something very important in society. So it's overcoming fear and then overcoming the DIY mentality.
Yep, love it. So, we saw a pretty bad market crash several years ago. You were in it. You're investing heavily at that time. You invested before, excuse me, before that time. A lot of people do have that fear because 2008, 2009, it got so ugly. What are some things to be looking out for to protect yourself? Because yeah, it's a risk, but like you said, if you educate yourself, it's a very calculated risk. What are some things that they can do to maybe help overcome that fear if we see another, let's say in 3-4 years, another real estate recession again?
That is a beautiful question because when everything's good, like they have been, things have pretty much run up for 5 years now, Josh. People have, what psychologists call the recency bias. Oh, just because things have been good, they ought to continue to be good. And if you're a younger person, then you don't have that sort of financial crisis experience from 2008, 2009, you might think things are just going to continue to be well. But you know what? In the real estate meltdown and the mortgage meltdown of 2008 and 2009, I made out better than ever. And I didn't even have to act. So I continued to be a passive real estate investor, having my manager manage my properties, and I made out better than ever. You can make out better than ever when you do like with what I discussed a few minutes ago, when you put the market ahead of the property. When the market's more important than the property, see what happened starting about 2007, 2008, my properties began to lose some value, but I invested in markets where there were sustainable job drivers. So rather than losing maybe 20 or 30 or 40% of value on my properties like a lot did, I only lost about 10% of value on my properties. Okay, but see, with my properties, the fourplex buildings and these smaller multifamily buildings, if the value of the property drops, even if it drops below how much my mortgage balance is, and I'm technically underwater for a little while, in a sense, I don't care too much. And here's why. I don't have any desire to want to sell the property if it's underwater because my rent income was greater than ever in 2008, 2009. So I was getting paid more on a monthly basis by my tenants to hold on to the property because I invested in a good market first and I studied markets first. So, how badly do you want to sell something if it pays you better than ever to hold on to the property? You don't. Well, why did it pay me better than ever to hold on to the property while the property had gone down in value? Well, what happened with the mortgage meltdown? It was more difficult for investors like me to get a loan, but it was also more difficult for tenants to go out and buy a home and stop being a renter. So demand for rent went up because it got more difficult to get a mortgage. So when rental demand goes up and the supply of the properties didn't increase at all, that increased the amount of rent income I was able to get. Because prior to the mortgage meltdown, it was so easy to get a loan that a number of my tenants were able to go qualify for property and I was losing them as tenants. Well, now they had to rent. They couldn't get a loan and I already had my income properties. So I was invested in a good sustainable market that has industry sectors like resource extraction and distribution. Industries like resource extraction and distribution, they're highly tied to the land. You just can't go outsource those jobs to Korea or Vietnam or the Philippines. So because I paid attention to the market prior to the property, I made out better than ever. And I would advise your listeners to think about the market first, then look at the property later.
Yeah, no, I love that. So, now, do you invest outside of, I know you're up in Anchorage, Alaska. I mean, are you going anywhere that has that market that kind of fits your model, or do you just stay close to home?
Yeah, great question, Josh. About 5 years ago, I started to invest outside my home market of Anchorage, Alaska. And I started in what I would call a safe place to invest, and that was Dallas, Texas. Dallas, Texas, they have a lot of Fortune 500 companies there. They have a very diverse economy. They have the third busiest airport in the United States. They do have some resource jobs there and a lot of finance jobs. Dallas is really the financial capital of the South. So when I started to look around for where else to invest, I started with the market first. What has the good market drivers? Because Anchorage, Alaska, as good as the market's been, I don't want to fall into the recency bias and think just because things have been good, as long as I've lived here, they're going to continue to be good. Because although Anchorage does have has had a strong economy, we are very dependent on the price of a barrel of oil, and you know what's happened with the price of a barrel of oil lately. So I sure am glad I started to diversify out of market starting in Dallas.
Yeah, love it. So are you still kind of following the path of fourplexes, or has that expanded?
In my local market here, I have larger buildings. I have an 11 unit building and a 9 unit building. And then in the 48 states, I buy turnkey single family homes. Turnkey is a model where I buy a property where it's already renovated, already tenanted, and already under management. And then I do a little bit of agricultural investing as well, actually internationally. So the agricultural investing I don't do that in the United States because the United States has a lot of regulation and very high prices for agriculture. So I do that out of the country.
Yeah, no, that's awesome. I love it, man. So at what point would you, let's say you have a multi-unit, at what point would you think of selling it?
Okay, that's a really good question. I would think of selling it when I have about 40% equity in the property. By the time I get up to about 40% equity in a property, I'm able to have enough such that I can sell the property, pull that cash out, do another 1031 tax deferred exchange, and put it into another property. So the time I knew it was right for me to sell the fourplexes, Josh, were when I had almost 40% equity in them. So I put those two fourplexes up for sale, which is like taking a leap of faith to some people. Those were two very profitable buildings, but again, it's overcoming fear and migrating to your best and highest use. And I exchanged those two fourplex buildings for a local 11 unit building and a 9 unit building. Now, some people would have fear of that because, for one thing, they're taking on more debt. I took on more mortgage debt when I used the equity from those two fourplexes as 20% down payments on the two larger buildings. But as real estate investors, we have the ability to outsource every bit of our debt to tenants. So that's a great way to think of it for people that are debt averse. Think about it. You have the ability to outsource every bit of that debt to your tenant and still have money left over called cash flow when you go ahead and calculate that conservatively. So I sold about $1 million worth of fourplexes in those two fourplexes and exchanged it for about $1.7 million worth of those two larger properties. So now I'm leveraging a greater amount. My cash flow went from $1,500 a month to $4,000 a month, just within that part of my portfolio, just with trading away those two buildings and trading up for these two larger ones. And I was able to get a better leverage ratio at the same time. And additionally, I was able to make that part of my portfolio more stable because, if you think about it, if you have two vacancies in 8 units, you've got 25% vacancy. But if I just have two vacancies in 20 units that I traded up for, now my vacancy is only 10%. So I made myself more stable at the same time. And again, every part of my debt is outsourced to tenants. So it's really a beautiful thing. I was able to use more leverage when I did that. If I let too much equity accumulate in any one property, I've cut my leverage ratio. The dollars are not working as hard for me. And, as a beginning real estate investor, it was always difficult for me to get my mind around that part, that I didn't want to let too much equity accumulate in a property. I thought real estate agents were just telling me that because they wanted to make more transactions, to make more commissions, because that's a very transaction-based thing. When you sell properties and go buy two more, I thought agents were just putting pressure on me, but it's true. You want to learn about leverage. You want to leverage more. I think a lot of people get excited about something called compound interest. I don't know whether he said it or not, but it's been said that Albert Einstein said that the eighth wonder of the world is compound interest. Well, you know what? Compound interest is lame. Compound interest is slow. If you've only got compound interest, your chances of building wealth are small. Learn about leverage. When you learn about leverage, you're using other people's money, not only your own, and you're basically leveraging your compound interest. You're using leverage and compound interest at the same time. Compound interest is slow. Einstein was wrong. Leverage is what builds wealth.
Yeah. Well, and then like you said, as long as you pick the markets right, so you don't have those vacancy rates, it makes it minimizes your risk. It's that's when people are probably failing in that model when they're just going out there and not doing their research on those markets.
Yeah, you're right, Josh. And you know what? If I can just jump in, I just got pretty excited about leverage. And I know we probably have some people listening that don't really know what leverage is. Let me just give you an example of what leverage is. Okay, let's go back to that first fourplex building. I bought that for $295,000. With my small down payment and closing costs, I had $12K out of pocket. So $12,000 is what I had as a down payment and closing costs. Well, if that $295,000 building appreciates just 5%, that's a gain of 15K. Okay, so I just let you know I made a gain of 15K in year one at only a 5% appreciation rate, but I only put 12K into it myself. So I only put 12K into it, and I've added 15K to that. I've now got 27K. So that's a return of over 100%. I made my 12K of equity go to 27K in just a year. How did that happen? How did I get a return of over 100% when the building only appreciated 5%? That is due to leverage, because I got a return on both my 12K and the 280 some K that were borrowed. That return went to me, not the bank. So I was able to leverage the bank's money. That's what creates wealth, not just security. If you want wealth, you want a leverage in a sustainable market.
Yep, love it. So, I'm really interested to hear kind of the journey that led to Get Rich Education. I mean, at what point did you decide to start this and start teaching these methods? Because you're out there busy investing. You could just keep focusing your attention on that and adding that. At what point did you start Get Rich Education?
Yeah, that's a great point. Well, you know what? At some point, just like everyone else, I ran out of my own money. All right, I ran out of my own money. So I need to learn some new skills. One thing I'm trying to learn is syndicate, how to aggregate other people's money and do bigger deals. So I go identify the deal and match other people's money with it. I'm still learning more about that. And the other thing was to help educate others. I've had a great deal of success. You could probably tell I really have a passion for talking about this. And I'm able to do that with GetRichEducation.com and the Get Rich Education podcast. It's using an abundance mentality to invest in real estate for an outcome of lifestyle improvement. We all want lifestyle improvement. We think of investment real estate, we might think of how many rental doors do we have? And then, well, how much cash flow does that generate? Well, what really matters is it the time that it opens up for me? Well, it's really not even the time that it opens up for me. It comes down to touchy-feely things like peace, joy, happiness, love, freedom. That's what we all really want ultimately when we keep asking the why, and why question. So if I can have the end result of spreading more peace, joy, happiness, love, and freedom by educating others through Get Rich Education, that is a great give back. If I die on the highway tomorrow, probably the greatest thing I've ever given back is telling people how to do this. So, I guess one way to say it, Joshua, is do the right thing and then do things right. Okay, in life, doing the right thing is more important than doing things right. So what do I mean by that? What I mean is learn about the right thing, learn about real estate investing, something that's created great wealth and takes very little of one's time once they get their system in place. Okay, if someone works a day job as an engineer or an accountant, they can learn how to do everything right in that job, but are they doing the right thing by being in that job at all? So do the right thing, then do things right.
Yeah, and what I love about you with Get Rich Education is you see all these quote unquote gurus that are in this space. We all see them. Buy these investments, no money. All these scams that exist out there, and I love talking to guys like yourselves that are the doers, right? That have done this, that have built it, that are practicing what you're preaching. And there's very little of that out there. So I love what you're doing. Where do you want to take this? How big do you see? I know it's probably tough to see how big this is going to go for you, but what are your goals with this?
Well, that's a great point, because it actually is a competitive space when you're in the financial education space, as I've come to find out. One goal is I want to turn more nobodies into somebodies than anybody. How great would I feel about myself if I turned more nobodies into somebodies than anybody? Just living a life where you build security for yourself, just living a life where one contributes to their 401k so they can actually start living the life they want at age 65. I don't think that's what people really want to become. I think they want a life a lot more grand than that. So if I can turn more nobodies into somebodies than anybody, I can feel pretty good about what I've done. You want a lifestyle arbitrage, arbitrage being the difference of how most people live and how you really can live. And once you have passive income from real estate, you've opened up time so that you can create that peace, joy, happiness, love, and freedom that you want for yourself, that you want for your spouse, that you want for your kids. So that's my goal. And that's not a very tangible one right there, admittedly, but yeah, that's what I want to do with it.
No, I love it, man. I love it. So, we find so often in life that good becomes the worst enemy of greatness. It's so easy to go get caught up in the good enough and settling. And I mean, life gets pretty good, so we're going to coast. You're a guy that just keeps expanding and expanding and expanding. What keeps you leveling up? What keeps you not settling for good, but always chasing greatness?
Boy, yeah, that's a really great question. A lot of people do just settle and they become pretty complacent. That's really the word, complacency. And, I guess it really comes down to who my role model is, Josh. And this gets a little bit deep. If you'll just hang with me for a minute, I think I'm a pretty positive guy. And this can kind of be a sad place to go. But in a sense, my hero, my role model is an 8-year-old child. Because an 8-year-old child, they haven't had their mindset diluted by scarcity mentality, which is what most adults have. An 8-year-old will still tell you that they want to travel to the moon next month. An 8-year-old will tell you that they want to have 10 brothers to love and play with in their sandbox. An 8-year-old child, you get that undiluted, unfiltered, what they really want. Well, you know what? As people grow up and assimilate in society and learn to settle and learn to get complacent, it becomes really sad, such that by age 25, most people die. Most people die because their dream and their ambition and what they've really wanted to do has died by age 25. And it's just that people are not buried until age 85. And that's a very sad thing to say. Yeah. So don't settle. Don't become complacent.
Yeah, I love that. You're right. I mean, we all start off, and I've got 3 young kids, and man, they just, there's no limit, right? And then through schools and our parenting and society get domesticated. You just get domesticated to play small, and it is a sad thing that exists out there.
Yeah, it's easier than ever to be who you want to be with the democratization of information, with the advent of outsourcing. I mean, this is the GSD mode podcast. Outsource more of your life, outsource more of your small tasks to things like Fiverr or Upwork, or American-based virtual assistants. Check out fancyhands.com. Check out hiremymom.com. So continue to elevate yourself to a higher use and just get away from those everyday mundane tasks that people with a scarcity mentality are willing to do for you.
Yeah, love it. So, when it comes to self-development, because I know you're a guy that's a student of the game always, and you just talked about, you're still always studying and immersing yourself on what's that next level, and with that. So, how important do you feel that self-education? I mean, what does that mean to you? What does that look like in your daily or weekly routine? And our listeners that are listening to this, if they want to start taking this path, how much research should they be doing on this?
Yeah, it really does start with education. You're 100% right. It starts off with a mindset book. Like if you have not read Robert Kiyosaki's landmark Rich Dad Poor Dad, it's got to be a book that's 15 to 20 years old now. That really helps change one's mindset, because you really need to think differently. It really starts with thinking differently. If you think like everyone else, you're just going to do what everyone else does. If you think contributing to your 401k is going to create wealth or create a good life for you, you probably need to go on and read more books and educate yourself some more. It's all about investing in you. Even like I said, with real estate investing, the property is only the fourth most important thing, rather. The number one thing is you. It starts with you and educating yourself. And, I'm still a big fan of networking in person, going to events in person. Yes, I love webinars. Yes, I love podcasts. Yes, I love, a lot of the resources that are so convenient for us now. But you know what? None of those technology-driven things really do. We don't get to meet the other participants in it. If you go network at an event in person, you have breaks, you have the ability to meet people in the hallway, exchange business cards. So when you go to events in person, you tend to retain more when you see a presentation in person, and you can network with others. Well, you're starting to learn who you need to have on your team when you network with others. You help to find out who might be a good property manager, what managers worked for that longtime real estate investor that obviously cares a lot about their future if they're showing up at a real estate investor meeting. So, when it comes down to education, don't dismiss the value of doing things in person.
Yep. Awesome. So going from the, back to, I guess, transitioning to a real estate agent, right? Because a lot of investors, I mean, you have a relationship with a great real estate agent. We have a ton of real estate agents that are listening and watching right now to the show. What kind of advice would you give to a real estate agent that, maybe they want to invest themselves, but maybe they also want to go out there and represent investors? What are some of those things that they should be looking for, educating themselves on, how to go out there and maybe find investors like you, and the people that are in your circles to be able to help find these deals for them?
Well, I mean, going to your local real estate exchange meeting, I mean, that's one. Again, another, as an agent, you have good access to the MLS. You have access to a lot of the best deals already. Most agents aren't in income property. 90% of agents are just catering to the primary residence buyer. So you really want to go find an agent and get around an agent that's already in income property. They're the ones that are likely to have the pocket listings. Now, a lot of times you might have someone that's both a real estate agent and they have their own property management firm. Okay, those can be really key people to get to know. Okay, for example, my property manager in Anchorage, he's a real estate agent and he owns his own management firm. Well, that agent, he knows a lot of investors like me, and he knows about when I want to sell because he knows about how much equity I have in a property. I keep in close touch with him. So he's going to know when I want to sell before I ever put it on the market. So if you can get around an agent that's also a property manager, they're really going to have a lot of key information, and they're really going to know when the best pocket listings are coming up.
Awesome. So what if there's somebody that goes out there and finds the deal? Right? They find this amazing, it's just an amazing deal, but they don't have any money. They don't have the down payment. Because a lot of people say, "Oh, just go find the deal, and the investors will follow." If they found the deal and they wanted to partner, let's say with an investor like yourself or just another investor out there, what is like how could that be structured to create a win-win?
Great question, because you can buy real estate with no money, and it's not some late night infomercial either. Through something called syndication, if you're a good communicator and you've educated yourself on real estate enough and you don't have any money, but you've gone out to identify a deal, you can get together with an attorney, and I know some really good ones that will go ahead and write a private placement memorandum for you and write a cover letter for the deal and an executive summary of the deal and so on. And you can present this deal to prospective investors without having any of your own money in the deal and attracting prospective investors. So it does take an attorney to set that up. In reality, you're probably going to be more credible to prospective investors if you already invest in real estate yourself, but you don't absolutely have to if you understand it well enough. And you've also demonstrated to those prospective investors that are going to invest in your syndication deal that you've aligned yourself with a good team and that you do have a good manager for that apartment building. So that's one way to do it. Wholesaling real estate is another way to look into how to secure real estate or how to get profit from real estate without using any of your own money. That's not a field that I specialize in, but that's something else that one can look into.
Yep, love it. And so, I know that you've got a lot of these podcasts. You've obviously have a lot of people reaching out to you, hosting seminars. You get asked a lot of questions. What's like maybe one question that you never get that you think like you wish you would get because it's important for people to know out there?
Yeah, that's a great question. The question I get that I wish I would get, it's one I don't really hear. The question that resonates the best with me when someone else asks me this question, And it makes me tell myself, now, this is a person I want to get to know. This is a person I want to spend more time around. This is a person that's worth me investing my time in, is when they ask the question, what's my time worth? I mean, that is a high level question there. That's the thing that people need to ask about more, especially when it comes to real estate, something that can really bog you down, especially if you self-manage. What's my time worth? Like I said, it all comes down to the ROTI. What's your return on time invested? A metric most people have never heard of, but it's probably the most important one.
Yep. Awesome. So, I created this podcast because it's, you've got all these, quote unquote gurus out there. They're operating from a place of theory. And I wanted to create a space where we interviewed the doers, guys like yourself that have went out there, that have built it, that are doing it, that have overcome the adversity and doing it on a big level, and bring that true information to the marketplace so people can then learn to grow from that and go out there and create epic businesses and lives themselves. So with that being said, do you have any last pieces of words or advice or inspiration that you'd like to leave our listeners with so then that they can go out there and create that amazing business like you've been able to do?
Yeah, I sign off with every show of, don't quit your daydream. Most people say, oh, don't quit your day job to make it funny. But I sign off with every Get Rich Education podcast with don't quit your daydream. Okay. Do the right thing and then do things right. You're a human being first. You're a human doing second. Continue to migrate to your best and highest use, and you're going to live life better than you ever thought you could.
Yep, awesome, powerful words. And to our listeners, you guys, I end every podcast with this, but every information is not power, right? Information without implementation is really just the start of delusion. So when we implement and take action on that information, that becomes power in our lives. So you guys just heard from one of the top real estate investors out there, entrepreneur, business owner. Take something that he shared. He shared so many amazing pieces of just knowledge and some gold nuggets there. Take something, implement right now so you can go out there and create the life and business that you want. And Keith, man, I know how busy you are. This has been a massive honor having you on the show. Greatly appreciate it.
Yeah, thanks a lot. You can find out more about me at GetRichEducation.com or the weekly Get Rich Education podcast. Joshua, thank you so much for having me on. It's been fun.
Yep, absolutely. Those of you that are watching or listening to this, all the links will be below, whether you're watching or listening. All the links will be below, so you can click right to Keith's site and go check them out.